So it's Thursday morning still. I'm looking at the gold market. I got a long signal here, but not filled. And then a short signal here, and I got nicked. So -7 in gold so far. But the change, I actually implemented new models last night, and then in preparation for the weekend here, where I'll be putting out models with different sets of risk levels for people trading multiple markets like I am, or single markets. And so let me pull that up real quick. Where did that go? And so that's what you can see the spreadsheet is partially filled out now. So for the multi-market on the left here for CLGC 60 US, 60 London session, and then the yen. NQ nothing right now. I can't. It seems like a waste of time at this point. So I want to look at that in isolation. So the work this week and weekend is calculating or doing the analysis to come up with the risk, the sets of codes with an appropriate risk factor for the other markets, and we look at that different. So we'll see what that looks like by the end of the week. But for the multi-market, the key thing here is we're looking at, if you look on this line here, this is the output from the analysis program. The trades per day, I like that around 3/4 of a trade per day. And the ER. This ER needs to be, the higher the better, but one thing that's interesting to look at is, if you'll notice this number here where it says 7, that's the minimum requirement in terms of trade quality in that bucket. So what this 2872 means is take the data that you have, break it up into buckets of 28 days, or basically 4 weeks, right? And then only show me the aggregate trades, the aggregate codes, which represents a trade behavior, that are greater than 7, and I see it at least twice in 2 buckets. All right, so what's interesting here is cases where you see what you expect to happen is you have in the buckets where that behavior, so all of these behaviors are meeting that criteria. In the buckets where that behavior is meeting that quality requirement, it's known, but what about the other buckets? So either in the other buckets, it's not, you're taking a loss on those trades, or it's not showing up. Okay, and you can infer that from the requirement ER, which is 7 in this case. The ending ER for the system is 9. It's greater, and what that indicates is that the codes that are showing up as high quality codes are not, those trades just aren't showing up in the other buckets. So this is ideally, this is what I want to see. Low trades per day, and then an ER that's actually higher than what I'm requesting, okay, or what I'm requiring. It doesn't always work out that way. Gold is, this is more like what I expect to see. Gold, the ER requirement is 7, but I actually get 6.6 when I run the whole system. Trades per day 1. I went ahead and took a little bit more risk here in gold because the difference was so dramatic. So the next level down, I actually copied into the spreadsheet here. Trades per day at 0.74 is more in line with what I'm after. But you can see the difference. The profit's at 308 and the ER is 5.92. here, the profit jumps up dramatically if you go ahead and take a little bit more risk, more trades per day. We'll see. I'm really concerned about that choice because gold is the market that I was struggling the most with in the last experiment in March. So we'll see. I like the trades I saw today. We just reviewed those. One I didn't get filled. One is a nick, but those are good signals. 6E, kind of the same story. 6 is the ER requirement, and you're getting 6.6, so I like that. And then 0.87 trades per day. That's the 6E US. Here's the London session. It's not as nice, right? It shows, your requirement is 9. Your system ER is 5.9. So quite fairly big difference there. You'll see a relationship between these two numbers and then the risk factors. The risk factor is going to go up the more disparity there is between the your required ER and the ending ER for the system. Okay, and then 6J is the last one here. It's interesting. This market is quieter. There's a lot more behaviors that show up, and yet you still get less than 1 trade per day, 0.91. Same thing, not quite as nice looking, right? 8 is the requested ER, and 6.16 is the system ER. Okay, all right, so that's what's done there, and then what I'll be doing is filling this in so that this goes to, if you were going to trade just the yen, you'd want to use whatever ends up listed here. Right? So we'll take more risk because we're not trying to, our focus is different. Our focus is not reduce trades per day. It's increase the profitability in that market. Let's see. So now we're just waiting. It's interesting because this approach, you're taking fewer trades. We'll look at it at the end of the week, and so it really changes your mindset if you're able to not look at the market and go, oh, I missed this move, I want to catch that move, and get all upset about that. If instead you just look at the output at the end of the day, end of the week, end of the month, it's a pretty clean way of doing it, and we'll see. We have to burn it in live now. Now that we've finished sort of all of our testing on how to approach the analytical outputs here. All right, so just looking at gold, one of the things I'm concerned about with gold is that clear this top group is the group I'm running. So that's 1.03 trades per day. You can see it right here. All right, which is a little bit higher than I'm actually aiming for, though I don't have any empirical data that says 3/4 of a trade per day is a good number. That's just what I picked as the stake in the ground. I'm a little concerned that that's too high. All right, and the next level down was, and you can see it in the parameters here, where requiring 7 as trade quality yielded 475 profit, which is a good number. On 6.6 ER, also a good number, and then 1.03 trades per day, higher than I want. The next level is, we're getting more strict with the trade quality requirement of 8, and you can see the difference here. All right, we dropped from 475 to 308, and the reason is that the behaviors, the number of codes you're taking changes from 5 long and 4 short to 4 long and 3 short. Okay, so you're losing the 2 trades that you're losing are the ones that are making up this 165, 170 ticks of profit across 14 weeks. But this one down here, it would be the one I would normally pick because it's 0.74, about 3/4 of a trade per day. The reason I didn't is that what I saw here was not only did the profit number go up, but the trade quality, overall system trade quality went up as well. 6.6 versus 5.9. That's not what you normally see. Normally, as you go higher, stricter in trade quality. All right, so from 7 to 8, I'd expect to see this ER number go up. Instead, it went down. And so what that means is that the trades that I lost by getting more strict really did well when they did show up. All right, and so that was my thinking. So we'll see how, sort of how this works out. We need to let this run now for 3 or 4 weeks, and then we'll figure it out. The worry is, again, we're trying to keep the number of trades per day per market down, and I'm concerned that this is too high now. So today in gold we saw 2 trades already. But I like that signal. You can't be unhappy with that signal. I just didn't get filled. Right, so that's life. The analysis program assumes you get filled there, which is potentially a flaw in the analysis program. And then we got nicked there, and that's kind of life as a trader. But I don't see anything. I don't see any stupid trades here, right? And, so I'm happy with that. Just as a human, we look at this and we see, okay, there's that, which suggests that the market's done going down, and then you get this nice little pullback, and then signal along there. This is this trade short here as a human seems a little early. Actually, I would call it a gutsy trade, right? Because you did try and you did set this level there, and then you rolled over and tried again and failed. So on that down bar, that's true, but at a wave level, you haven't failed yet until about that bar. So we set the level here at the wave. So just as a human looking at that, going, this bar here seems like a better choice to me as the place to get in, or even that signal right there, the 241. At this point, though, you're in the POC, so it's anyone's bet what's going to happen. So, okay, so that's enough for this discussion. Okay, here we are at the end of the session, and no other trades occurred. So just end up down 7 ticks. In gold, it's gold has me I'm a little concerned, mostly because of for a human reason here. So we'll talk about that real quick. You got to like the signal, all right? So I just didn't get filled there on that nice little thrust. And then the short is one of these cases where you just got nicked. This is the Brownian motion of the market, all right? I think we talked a little bit about that pattern earlier. My concern here is that I'm actually taking a little bit more, I'm targeting a little bit more trades per day than I sort of said I was going to do. And there is that I need to be cognizant of that, because what's actually going on is there's 2 things. One is that when I ran the last experiment in the machine learning system here in March, when I had gold and oil doing an approach where we looked for the most recent, clearest signal, gold just did terrible. I basically got my ass kicked by the market taking that approach. And so it's possible that I'm trying to subconsciously make up for that, those losses. So I'm thinking about that. Maybe that's why I'm doing it. The other is just the basic human greed that comes into play. If we look at gold, we talked about this earlier in the discussion. There's a big difference here in these two levels, 308 versus 479. This is not a small number. That's 170, 160 ticks. And so those 2 things have me a little concerned. So today, I started this off in gold with new models and new analysis and new sets of code behaviors. and I immediately take a loss that day in gold. So red flags are going up. Okay, Shane, are you being foolish here? I look at the signals here, and I would say no, that's not the case. But it's worth thinking about, and it's worth being cognizant of. If it continues to happen, then dial, it's very simple. Dial it down to this group and move forward from there. All right, that's it for today. We've got tomorrow, and then for members, a bunch of stuff will be coming out on multi-market versus single market sets of behaviors or action codes. So look for that. Take care.